Imagine walking into a casino and finding out almost everyone in the room is betting on the exact same number. Would that make you feel more confident or more cautious? Because that's essentially what's happening in the market right now. And history tells us crowded trades can work until they don't. Let's take a look at this chart. Since the S&P 500 bottomed on March 30th, the market has staged an impressive recovery. But where has all the money gone? That's the interesting part. Each line on this chart represents investor money flowing into different sectors of the market, and one line completely separates itself from everything else: technology. Since the market low, investors have poured more than $143 billion into technology sector ETFs. Not $143 billion into the market, $143 billion into one sector. Meanwhile, most other sectors have seen relatively flat flows, and some have actually experienced money leaving. In other words, a huge portion of this rally has been driven by one dominant theme: technology. Now, that doesn't mean technology is bad, far from it. Technology has been one of the biggest engines of growth in the market. But when everybody starts running toward the same opportunity, something important happens. Concentration risk increases. The market becomes more dependent on one story continuing to work, one sector, one theme, one narrative. And if expectations change, leadership can change very quickly. We've seen it happen before. Markets love to reward what's working until they start rewarding something else. That is exactly why we take a risk-first approach. We don't build portfolios around whatever is getting the most attention today. We build portfolios designed to participate in opportunities while managing concentration risk. Because diversification isn't about avoiding winners, it's about avoiding dependence on them. When leadership rotates, diversified investors don't have to guess where the next opportunity will come from. They're already positioned for it. The four most dangerous words in investing are, "This time it's different." Sir John Templeton. A couple of things to remember. First, technology is leading this rally, but leadership in markets is never permanent. Second, when too much money flows into one area, risk often becomes concentrated where investors feel safest. And third, successful investing isn't about chasing what's hottest. It's about owning a portfolio that can adapt when the story changes. This is Cloud Investments with your weekly market update. Thanks for watching, and we'll see you next week.